we're still adamant fans of Bitcoin because to me, Bitcoin is, first of all, it is really the ultimate form of trust at the moment, and it is digital gold in an easy way. And if someone says, well, what does that make it worth? Well, gold's 22 trillion network value, so Bitcoin should be worth $1 million. And there's plenty of future businesses that can be built around Bitcoin because of its stability. Ethereum is a smart contract enabled platform, and so it is unique because you can actually store real things onto the blockchain, whether you use layer 1 or layer 2. And I think maybe the real killer app, and this is what stablecoins are showing, is that as we move into a world of like AI and we're trying to create units of pricing and to simplify the movement of goods.
Tom Lee of Fundstrat solidified his position as one of Wall Street's most audacious voices earlier this year by reaffirming his commitment to a long-term Bitcoin thesis that few conventional analysts are willing to express. Investor confidence is still being shaken by interest rate volatility, regulatory ambiguity, and macro uncertainty. But Lee is very steady. Bitcoin is a structural foundation for the financial industry's future, not just a hedge. Lee is interested in a deeper convergence, the alignment of digital scarcity, generational wealth transfer, and monetary devaluation. This is in contrast to many analysts who change their perspectives with every cycle. Bitcoin isn't dangerous in that context, but ignoring it is. His most recent predictions at Fundstrat point to a goal of $150,000 per Bitcoin within the next 12 to 18 months. The valuation is predicated on genuine flows, rising ETF demand, minor economics after the halving, and the attraction of institutional capital looking for digital hard assets. It's more than simply a headline. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Well, I think Ethereum, is a chain that I think is getting a second look. I know that there have been criticisms of it in the past because of either how layer 2s and layer 1s interact or just really sort of progress and upgrades to the network. But to us, I think the real thing we have to recognize as we look at what's happening in the real world is that Wall Street is converging onto crypto, and they're choosing to do a lot of this work on Ethereum because stablecoins have completely changed Wall Street's mind about how useful crypto can be. As we've said, the stablecoins have created the ChatGPT moment for crypto because we're seeing consumers really use it in a viral way. Merchants are beginning to really love it, especially outside the US, and now banks are realizing it's actually a decent business model. We just saw Citigroup even just say that they're looking at creating a stablecoin, even if it's just to manage deposit base, but still, it is really Wall Street converging onto crypto. And at the end of the day, a couple things are going to be important. Wall Street wants to find a chain that's operating compliantly in the US, and they want to find a big one, and where there's already a lot of real world assets, tied up and on the layer 1, and that's why Ethereum, we think, is going to become extremely relevant over the next decade.
I mean, do you think that Ethereum can keep up?
Yes, and they just have to create the right incentives, between the layer 2s and layer 1s, and make sure there's just not too much gas out there, and that we can absorb that supply. But I think that's where these treasury companies are playing a pretty important role, and they're earning money staking. And I think the reality is that if there is a rejuvenation of interest around any token or any token platform, it also rejuvenates people's creativity and interest in making it more usable. So to us, this ChatGPT moment, which is converging around Ethereum, I think is going to also help unleash a wave of innovation. It's no different than when ChatGPT first swept across Silicon Valley, and this is after everybody had invested decades on SaaS. But guess what? Now there's many venture-funded businesses around using AI and ChatGPT that are exploding and getting to $100 million run rate so quickly. Well, I think that's what's going to happen in crypto. I think this is a really big moment for the industry to realize that as Wall Street converges and they're bringing a lot of interest and bringing a lot of new users and a lot of new applications, that this could transform actually the importance of smart contracts and Ethereum. So I think Ethereum's sort of dominance could actually grow dramatically.
What's your price target for ETH as we head into the second half of the year?
Our price objectives at Fundstrat. So I wear a couple of hats. I'm the chairman of BitMine. but I'm also the head of research at Fundstrat. And actually, I have a third role, which is the CIO of Fundstrat Capital. But at Fundstrat, Sean Farrell is the head of digital assets research. And he's given me some informal sort of targets. One way he thinks of this is that if we look at Circle and its free cash multiple, which now is like 130 times EBITDA, on an equivalent basis, Ethereum is closer to 15,000. And that makes sense. I think the layer one, as you know, as you get into layer one, you should apply a higher multiple to like sort of theoretical usage because it's the same reason software companies get higher multiples than retailers, right? The more you're getting away from the customer and the more it's pure signal, you apply higher multiples to that business. And so I think in the near term, our technical strategist Mark Newton thought we could be seeing 4,000 before the end of the month for Ethereum, but that's not where it peaks. He just thinks that that's the first target. And then I think something, if Sean Farrell's math is correct, then I think 10 to 15,000 actually makes sense too.
By the end of the year?
It could be end of year, it could be sooner. I mean, it just really depends. But that wouldn't be the cap, but that just shows you that's really, a level above 5,000, it would be a decisive, all-time breakout for Ethereum. So I think that's a significant level to watch as well. In fact, MicroStrategy, when they began their treasury strategy, Bitcoin was 11,000, and it's 120,000 today. And so I think that's foremost where we're coming from. And some people say, well, why don't you just buy Ethereum outright? Well, an Ethereum treasury company can actually increase your ETH holdings per share by taking advantage of capital markets and volatility to raise capital. And they can also earn money from staking. And for instance, BitMine initially funded with $250 million of ETH, and that was closed on July 9th or July 8th. And then 3 days later, BitMine increased the treasury holdings by an additional $250 million. So in just 3 days, doubled the amount of treasury holdings, and that was as of Friday last week.
Tom Lee's Ethereum valuation model is based on the straightforward yet impactful notion that blockchain networks could benefit from the same kinds of valuation criteria that are used for conventional businesses, such as earnings multiples. However, this analogy does more than only suggest possible benefits. It marks a change in our perspective of blockchains from being only speculative tokens to actual platforms that provide cash flows, similar to rapidly expanding software firms. According to this perspective, Ethereum serves as the digital foundation for the upcoming financial services industry. The core of this concept is stablecoins. Stablecoins are now being accepted as instruments for efficiency and innovation rather than being viewed as threats by traditional finance. In order to expedite deposits, payments, and settlement, major banks are even considering the possibility of launching their own stablecoins, not just for show. Lee believes that this increasing institutional interest marks a significant shift for Ethereum. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
We're still adamant fans of Bitcoin because to me, Bitcoin is, first of all, it is really the ultimate form of trust at the moment, and it is digital gold in an easy way. And if someone says, well, what does that make it worth? Well, gold's 22 trillion network value, so Bitcoin should be worth $1 million. And there's plenty of future businesses that can be built around Bitcoin because of its, stability. Ethereum is a smart contract enabled platform, and so it is unique because you can actually store real things onto the blockchain. Whether you use layer 1 or layer 2. And I think maybe the real killer app, and this is what stablecoins are showing, is that as we move into a world of like AI, and we're trying to create units of pricing and to simplify the movement of goods, simple examples of like tokenizing things from the real world onto a blockchain, you couldn't do it really on Bitcoin because that's not what Bitcoin's designed to do. So I think as you're thinking of Wall Street converging onto crypto and then AI innovations taking place and the idea of using even tokens or stable coins around that, well, then that's really when it comes to saying, well, Ethereum really is the largest smart contract platform in terms of network value, and that's what makes it attractive. I generally agree with people who say crypto responds to global liquidity, and so if central banks are easing, then we should see it in crypto prices first, and that's why crypto actually is a leading indicator for the stock market. And the fact that Bitcoin broke out to all-time highs is actually bullish for the S&P. But the interesting thing is that crypto is still not that widely held. So I think that, Bitwise has a great stat. They say 95% of Bitcoin's been mined, and only 95% of the traditional finance world doesn't own Bitcoin. So there's a real mismatch. And so I think Bitcoin continues to be the leading crypto asset to watch. But to us, as risk appetite recovers, Ethereum and small caps are pretty highly correlated. And I think that that's why Ethereum, in percentage terms, has more upside for the next few years.
Is the signing of these bills priced in, do you think? And if they don't get signed, how do you think that's going to reflect in the markets?
Well, there's always going to be an initial reaction, but then, the long-term reaction. I think, nobody can really ever correctly predict how Washington, what path it chooses and what bills pass. But I think the reality is that crypto regulation is vastly improved over what we saw for the last 8 years and 12 years. And so I don't think anyone should be too discouraged by developments in Washington, but they should, of course, watch it closely. And then keep in mind that you can always have some things fixed through either reintroducing items or executive orders. So I wouldn't read too much into whatever happens out of Washington.
Is there anything that you've been closely watching this week that I haven't asked you about? I know Bitcoin and ETH have been the real standouts in the headlines, but is there anything that you've been watching that you wish someone would ask you about, or that you think is quite interesting that not enough people are talking about?
Well, I've been paying a lot of attention to earning. We're in the middle of earnings seasons, and financials start to report in earnest. Well, this week and next week, but there have been a lot of comments from these financials about stablecoins, and stablecoins are frenemies for the financial industry. So I think that's just something people have to watch out for, because they're both a opportunity, but it's also a threat to their legacy business. So you have to keep in mind that in some ways, the financial industry is one of the strongest and savviest lobbying groups, that they have a role in how crypto regulations can pivot in either direction.
Tom Lee's observations offer us a compelling roadmap for figuring out where cryptocurrency might go next and why Ethereum and Bitcoin are both so significant, albeit in different ways. According to him, Bitcoin is comparable to digital gold. In an uncertain world, it stands for long-term worth, stability, and trust. Furthermore, Bitcoin may someday hit $1 million per coin if the market realizes its full potential, given that gold is now worth trillions of dollars. Ethereum, however, has a different function. It functions more like the technological backbone of the cryptocurrency industry. With smart contracts and on-chain real-world asset storage, Ethereum is in a great position to gain from the growth of tokenized assets, artificial intelligence, and stablecoins in particular. Lee thinks that Ethereum's special qualities will make it even more crucial as Wall Street begins to take cryptocurrency tools more seriously. Additionally, he reminded us that cryptocurrency is still in its infancy and that very few traditional finance professionals currently own Bitcoin or Ethereum. This indicates that a huge opportunity still lies ahead. Furthermore, he is hopeful that innovation will continue and that progress is being made, even though regulation may appear uncertain. Possibly most significantly, Lee brought up an important point that many people miss. Stablecoins are beginning to gain traction in the financial sector as something that has the potential to genuinely transform the way money moves, not just as a tech trick. And for banks and cryptocurrency alike, that could mean both risk and reward. In summary, Tom Lee thinks that those who remain informed, have a long-term perspective, and see the big picture before the rest of the world does will emerge victorious from this period of rapid change. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.